watching Stockwatch with me, Julieta Televi, and joining me to take your stock-related questions this evening are David Shapiro from Sasfin Securities and Wayne McCurrie from F&B Wealth and Investments. If you'd like to send questions, please email stockwatch@bdtv.co.za or SMS us on 41392. David, Wayne, good evening. I have to say, today was not a bad day. Market up 1.2%. It feels like a hell of a week to be having to vacate this chair. And David, I'm going to start with you because I often mention him. It's John Authors from Bloomberg. And his note this morning, he talked about the tsunami that he feels is playing out on world markets because it has been dramatic in the last 4 trading days. And I wonder if you agree with that, if there have been sort of a shifting of the tectonic plates, and you know, he used the tsunami analogy because he talks about this severe underground earthquake, and in a tsunami, water gets displaced and it's got to go somewhere. And he talked about, you know, these huge forces not playing themselves out on world markets. Or do you think, as always, we journalists are maybe using too much drama to interpret the events of the last couple of days?
Yeah, that's a big question. I don't want to take too much time, but I want to start off by something that flashed across Bloomberg TV, and that was Nouriel Roubini, who is known as Dr. Doom, and it said, markets are too pessimistic. And I took, oh boy, you know, if Roubini says that, you got to wake up. You know what happens when you ask, and I'm quoting from Paul Krugman. He says, if you go and look at markets and ask markets why people are selling, or ask people who are selling why they're selling, they'll say because prices are going down. Okay? You know, prices are going down and we're selling. There's nothing, they haven't really analyzed why they're selling, so it feeds on itself. But I can't, after really spending a lot of time reading other people's reports, because I'm not clever to do my own reports. You know, I don't have the spreadsheets and the models and don't understand economics and everything that much. But to put it down into one soundbite, nothing's broken. You know, nothing is broken. So I think this is just a gross overreaction. But you can't stand in the way of it. Let it run its way out. You know, you've got to let it run its course.
Yeah. I mean, Wayne, you've seen more than a few market tsunamis over the course of your career. What is your assessment? Also, nothing's broken, don't panic. There was too much froth in the system. It's got to be sold down.
I think essentially that's it. The market went up too much. I mean, we're back to where we were 3 months ago, not 3 years ago. And it's highly unlikely to get a fully blown bear market at the, you know, on the brink of interest rate cuts. That is very, very unlikely. We could see more weakness, but the problem is the share price, not the underlying companies, as David said. And of course, the economy is slowing down. You know, we're starting to hear hard landing recession talks, and that may well be true. But when interest rates are cut on a 1 to 2 year view, the economy will recover. So on the medium term, there's no threat to earnings. So there's only a threat to the valuation. So, and I mean, these companies aren't, this is not a falling sword or a falling dagger that these shares can just collapse in front of your eyes and disappear like we saw in the dot-com boom. There's nothing like that whatsoever. So maybe the downsides, we've had it. You know, maybe the downside's another 5 or 10%, who knows? But it's not 50% downside. It's just the valuation and the underlying earnings just do not support a fully blown bear market. And as I've said now, bear markets don't happen in a falling interest rate environment.
Yeah. And you did see the Bank of Japan today, which I think that was one of the factors that led to the ructions across the world, saying they would be, you get the sense that they backpedaled a bit and said, you know, they'll have easy monetary policy, and the topics rallied 2.3%. Did that do quite a lot to calm market nerves?
Yeah, look, I think so. I mean, they panicked. They definitively panicked in Japan there.
Yeah. You know, there was massive, don't underrate the huge amount of speculation. You know, there are not a lot of choir boys running out there and buying 100 shares here and there. This is massively, you know, the amount of money that is behind it. It's not your money. You know, it's not, you join an organization, you create an algorithm and you give it stick. And people were borrowing from Japan at very cheap rates, at virtually no rates, so they could borrow as much money and use that money because Bank of Japan was doing nothing, use that money to go into other markets and speculate. And soon as, so you're borrowing the yen, as soon as the yen starts to improve and get stronger, you're in trouble. And you have to unwind those positions at a fast pace.
Yeah.
And so that creates a little bit of a tsunami. And I think this is what Japan understood. So they didn't want this to feed on itself, because then it does feed on itself. Margin calls and undoing derivatives, undoing the options, and and what people never understand is that where you put in all kinds of protection, if it hits a protection, boom, the protection's gone and it bounces up again, and you say, well, how did I lose money? Stop losses and so on. So please, in markets today, this is not a few private clients who ask us questions on what's it, various NAMPACs and so on.
Copper 360.
This is a different level.
Okay, we shall get to the NAMPACs and the Copper 360s of the world. There's a question on semiconductors, and the viewer says, please ask the panel for the inputs on the sell-off in the semiconductor ETF SOX. It had a brilliant run, but came back sharply. Is this primarily because of the cyclical nature of semiconductors, or are the valuations just too high? And what is the outlook for the next year to 2 years? Is it time to look for new opportunities? Wayne.
Look, I don't think it's time to look for new opportunities. There could be more downside. The problem's not with the semiconductor companies. The problem's with the valuation of the shares. They had just run to crazy high levels, and some sort of correction, I suppose, was inevitable. And of course, it's so easy to talk about this post the fact. There could still be more downside, but it's not a. And I've said this so many times, this is not a dot-com bubble where these companies are going to not even be around in 3 or 4 years' time. They're only going to get bigger. They're only going to sell more. I mean, we've only really started on this whole AI, which requires massive computing chips and, computing ability. So we've only really started on this route. So it's just a valuation story.
Yeah, okay. Yeah. David, I'm sure you concur.
Said, if you listen to Zuckerberg and to Sundar Pichai from Google, they said the risk of being underinvested is far greater than the risk of overinvesting. In other words, if they're underinvested and this whole AI story works out or plays out, then their businesses are gone, as we saw with Intel. Intel behind the curve. So there's nothing wrong with these semiconductor businesses and the technology they're producing. But as Wayne says, there was a bit of a over-exuberance. It will play itself out. But the fundamentals are still very strong. Yeah.
I'm looking at the charts of the iShares Semiconductor ETF, and there was a massive drop. Was there some sort of event there in April? It doesn't, because it doesn't reflect what we've had take place in the last, say, 4 weeks.
Don't you remember, this was pre NVIDIA's results, where everybody was wondering whether NVIDIA could actually live up to the expectations. But they lived up to the expectations plus, to the power of 10 or whatever it was.
Yeah.
So they were far greater, and that's where you saw the turnaround in NVIDIA as well. So April, generally there was a market drop in April, about a 5 or 6% market, similar to what we're going through now. We've forgotten. We forgot that already.
Yeah, like childbirth. The pain goes away quite quickly.
There was a lot of tension before NVIDIA's results, and they come out, I think they're a month behind everybody, so we still got a few weeks to wait for that.
Okay, moving on. There's a question on Impala Platinum. What's the panel's view on Implats? Nearly 10% down since the Japan drama. Can I enter at these levels with a 12-month view? Today it rallied, and I'm going to stay with you, David, because today it produced, it threw the book at impairments. Basically a 20 billion rand impairment. I wondered what you had to say about that, whether you were cursing and muttering underneath your breath.
Well, it's, for me, impairments, I just go wild with them. But there's nothing they can do. They have to write it down. They can't keep it. But understand, and I think Wayne said it last week, understand this is money spent. There's no such thing as this is just a non-cash event. This is previous money spent. But what it does do is it just shows you how wrong those investments were, or how they've come down in valuations and that. So we corrected, and from now on, everything's going to be nice. Return on equity and return on capital and so on will be nicely in line, and we'll be able to pay the directors all their salaries and fancy bonuses. But this is money spent, so it's not, an impairment is real.
Yeah.
It's real money gone.
Wayne, having said that, having done the incredible disappearing trick with real money, would you look at Implats now and give it a chance for the next year?
Well, look, I mean, my view about mining shares and about commodity shares and platinum in particular on a 2 to 3 year view, unless something fundamental has changed and we don't get a commodity upcycle ever again, these shares truly represent good value at these levels. I mean, all the platinum shares are bouncing off the bottom. They've been doing this now for 9 months. So they go up a little bit, they come down, they go up. So Impala is the same, Anglo-Plats is the same. Nothing's really changed, except that hopefully we do get a commodity upcycle with the interest rate cuts that are just around the corner, and the 2 to 3 year outlook is good. I mean, this is exactly the same situation we had 2001, 2002, when no one wanted to touch a platinum share. It's exactly the same as what I had in 2014, 2015, where no one wanted to touch a mining or a platinum share. And yet the cycle did happen, and you made fantastic returns from it.
Just very quickly before the break, on retailers, especially in light of the fact that we may be getting interest rate cuts sooner rather than later, can you ask your panel if Truworths is a buy at the current price, and which of the two is better, Truworths or TFG? I actually like both, but I'm not too sure which one is better for growth. David, do you have a view?
I prefer Foschini. I think it's a really good business, and it's in the results. Look, it's very early. Even if we get interest rate cuts, I don't think it's going to funnel through immediately. It's going to give a lot of relief to consumers and to householders, but it will take time before it actually filters through the system. But even against that, our retailers are holding up okay. I don't want to say they're doing brilliantly, but they're doing fine. They're doing well. They're all stealing business from each other or from somewhere else. But you can't fault what they're producing. So I think with interest rates coming down, the markets will probably start to respond ahead of time, even before the results are shown.
Yeah. David's picked TFG. Would you go for? Yeah.
I think TFG is obviously a very, very good company in its sector, but Truworths looks relatively cheap in comparison to TFG, and the share hasn't done that badly actually. I can't really choose between the two, but we're talking about lower interest rates affecting the retailers. I mean, obviously, as David said, that takes time. But listen, I don't know whether it's before the end of this year or the first couple of months of next year, but there's a major windfall coming for these retailers, and that's the two-pot system. Their retirement thing. There are many billions going to be cashed in, and there's going to be a spending spree of note.
Do you really think there will be? I'm hoping that people will be a bit more cautious with their money.
No. What do you think? I think the average Joe is going to be logical and not cash in money that's readily available to spend now.
I suspect you will get money spent on bigger ticket items that people, not necessarily the stuff that you could get at Truworths or Foschini, or at least I hope not. I think it would be university education, building a house,
You're in a different world. They're just going to go wild. LVMH bags or whatever they've denied themselves, food even. The amount's going to be billions. Yeah.
There's quite a few studies of countries that's done this before, and countries that are far higher net average income or wealth per capita. That's exactly what they did. They took the money and they blew it.
Okay, well, I'm going to cling on to my little Pollyanna vision of the world.
Quick speed, in the supersonic speed, it's just going to go. It can't hold back. They've been waiting for this. just that money coming into their bank account, no, it's not going to last. It's like a lottery. You know, the people who win the lottery, they just spend, you know, or they hide away. I don't know. But
okay, well, let me move on. Please ask David and Wayne if I should sell Novus Holdings after it was David's stock pick a few years ago, or if there's more upside. David, I can't remember why you picked it. I seem to remember they had a big cash pile.
Yeah, they had more cash than the machines were worth. I mean, it was crazily undervalued, and it was a good operation. I think they came out in Naspers. I think it's their, am I right? Was it out in Naspers? It was their printing operations. And they had rejigged everything was clean and new, and they were just well positioned. So when you looked at the NAV, when you looked at the cash relative to the value of the company, you know, you were buying all those machines for nothing. But it seems to be, I thought there was some kind of takeout in that. I must admit, I haven't paid too much attention to it since.
Wayne, have you had a look at Novus recently?
No, I can't really comment other than the share price. Congratulations to David, as usual. Share price has done well over the last few years.
I have to say, from a person within the media industry, I would be cautious and maybe cashing out. If you see what Media24 is doing to close, well, its intent to close the print titles, media businesses are in trouble, and the printed publications especially, and that is the market that Novus serves. Not primarily, it's not the only market. Of course, they have textbooks and school books, etc. But the news media is in trouble.
Doesn't Caxton do all its printing through Novus? You know, all this, what's it, knock and drops and things like that, and so on. I don't know. We're talking now. I haven't refreshed my knowledge for some time.
Okay.
So, you know, good luck. But at the time, it just appeared to be absolute, you know, a steal.
Then there was a question on Copper 360. Is this a long shot on the hope of further discovery, or the perfect investment given copper's exciting prospects? I know I shouldn't ask Wayne because we have discussed this, unless you've changed your mind, Wayne, given sort of recent announcements from the company.
No, I haven't changed my mind.
David?
You like it?
I like it. I'd take a flutter.
I don't know. It just seems to be going sideways, and the copper prices come all the way from 1100 to below 900. I think because they're massive stockpiles. The worry is that I'm still waiting, you know, to find out what's going to drive copper higher. I know we say there's massive booms coming in housing and everything, and electric vehicles and so on, but until the Chinese start spending, I'm just holding back a bit, you know, on that. But listen, and Wayne, to be fair, no one's ever made money out of copper in South Africa, from Pellerman to whoever, you know, to all these mines, the Prieska mines, and I don't know what, you know, all the other copper mines that we have followed in the years, certainly in the years.
Look, I mean, as I said, I just am inherently cautious about startups in the mining sector.
Yeah. Well,
I'm just inherently cautious.
I did interview them today. They had a presentation today, so I have maybe a bit of knowledge gleaned from a couple of interviews with Jan Nelson. They're starting underground production at the Rietberg mine. They've got a 19,000 hectare prospect, a lot of inferred resources. But I suppose the important point is that the difference, or the price at which they're going to mine the copper, is about $4,600 a ton. The copper price is about $9,000 a ton. So there's a fairly wide margin. And if they can get the production consistently through their plants, then they've got a crack at making a success.
And good luck to miners, because if it wasn't for people like Jan Nelson and that, we wouldn't have a country today, because there were hundreds of people, you know, who mined gold, who dug holes in the ground, and the evidence is still around the country, you know, who never really made it. So I'm not taking anything away from him, because it takes a lot of courage of these, you know, people like that who go out and dig. But I'm saying his history, certainly in the copper side, hasn't been in our favor.
Yeah.
Uranium as well, add that to the list.
Just because you got burnt with your bar mitzvah money means that you can never ever drop your uranium pain, can you? That was a long time ago, David.
Yeah, look, David's bar mitzvah was a long time.
Just a follow-up question on the retailers, and the viewer says, in light of the two-part comment, which retailer would you go into? Is Pepco a punt? I mean, is there an obvious contender?
It's widespread.
I think all of them, yeah.
You know, people will be getting, if you get less than 2,000, you're not going to get anything. In other words, if it's 10% of your pension fund, which is 20,000. But there are plenty of people, you know, that are going to qualify, are going to get this 30,000 type pot. So that gives you a lot of scope to buy things. So, you know.
And then, unfortunately, people will still, when they get into true difficulties, will still resign to access their pension fund.
And you can't do it, I don't think, right?
You can't now, you've got to transfer it now, hey?
You've got to transfer it, yeah.
Okay, a quick question on banks. Everyone's talking about banks at good levels. The recent rally has shown some upside. Which is the best opportunity in the sector? What about ABSA?
That's Wayne's an ABSA man.
No, I'm not an ABSA man.
No, I mean, he knows.
No, ABSA, I mean, on the face of it, ABSA just looks absolutely steel giveaway, rock bottom prices. But yeah, I'm just cautious. I mean, this is ABSA. I'm just looking now. ABSA's at a 6 price earnings ratio. I mean, it gets there when you have an epidemic or a global financial crisis, and yet it's back at these valuation levels. But I'm just cautious. I would go, I mean, obviously, I would punt my own bank, but I'd go for Standard Bank, First National Bank. Nedbank's results today were very, very good. I'd still be cautious about Capitec, but I've been wrong on that for so long now. And maybe if you want to truly take a punt, ABSA, yeah. I mean, it is.
I think
the dividend yield. The dividend yield is 9%, and yet a 6 PE ratio.
David, you were going to say?
I think if you look at Nedbank, I think the encouraging part was the fall in impairments. You know, that's where a lot of the profit came from. And I think if they're seeing a fall, then probably it's going right through the industry where things are getting better. You know, all the provisions they made, they can undo, and people are paying back their loans. So, you know, there's a good point there. If you like low PE, high dividend yielders, the banks have really, they've never let us down.
I'm going to get to your stock picks a little bit earlier because I want to say a few thank yous. So, Wayne, what is your stock pick this evening?
One I did a while back, Sasol. I'm doing it again. It just looks so incredibly bombed out at these levels. Obviously, you've got to get a commodity upcycle. It's bouncing along the bottom here, but if there is any turn in chemical prices and the oil prices on some sort of recovery in the global economy, I mean, this share truly is going to do well. Whether it takes another year to do anything, or I got no clue, but it does look truly cheap at these valuation levels.
David, how about you?
I'm going for Novo Nordisk. I still like the fatty drugs. Both Eli Lilly's coming out on Thursday and Novo Nordisk. You know, Juliet, I always look at results on their own. I never look at forecasts and what analysts are saying and what they're expecting. And I always like to assess it on the strength of its fundamental result. And I mean, these are outstanding results. You know, they might have missed Wegovy by 1% or so, and they're down about 7% today. They were up 4%. Yeah, but I mean, this is a company that over the last 5 years is giving you 37% per annum. So it's still very much in the, you know, it's still a theme that is still very, very strong. Yeah. So give it a break, maybe a day or two, but it's a good, you know, it's still a very good business.
Okay. And I just wanted to make a few thank yous as it's my last show on Stockwatch. So David and Wayne, I think I started this with you in about 2009, so it's 15 years. And I have to say, it very long ago ceased to be a job, and it's just been a blast. Every Wednesday night has been an absolute privilege chatting to the two of you. I don't know what I'll do on Wednesday night at 6:30, but I really, thanks for the fun and for the wits and for the patience and for all the insight that you've doled out to me and to the viewers over the years. I really appreciate it.
Yeah, we're going to miss you. It's not the same. And I'm really sad. I am. I'm very sad. And I'm sad about what's happened.
Yep.
If we could talk to management, if they're listening, you've been an incredible anchor. And, it doesn't come overnight. So I don't know. I'm very sad that this is perhaps our last show.
Yeah, well, it is our last show. So
I must concur with David. It's been such fun over the years. I mean, we've had laughs. We've hopefully given more good advice than bad advice. And it definitely will not be the same without you in the chair. It's been, once again, such fun over the years.
Yeah, thank you. And thanks to the producers in the team. They've always had to put up with my grumpiness. Thanks to the technical directors, especially Mbongeni Kumalo, who is an unflappable force. He really doesn't get rattled very easy. So I really appreciate the years that we've worked together. And then lastly, thanks to the viewers. The show wouldn't have been the same without you and your questions, even the nasty ones and the ones that tell me to brush my hair. I've appreciated even those. The show is really, I hope we've been a useful conduit to such great investment insight. So from myself, a big thank you to you all. Up next, we have the close. Stay with us.